Good morning, everyone, and happy Sunday. I'm Gregory Schnese, and let's talk about Bitcoin Borrow Die. Bitcoin Borrow Die is a strategy based off of Buy Borrow Die, which is a way to acquire assets that are growing quickly, borrow fiat dollars against it, and then when you pass on, your inheritors receive a step up in cost basis. So it's a great way to pass on assets. This video is only for educational purposes. It is not tax advice or financial advice, but this is the simple strategy in 3 steps here. We're going to buy highly appreciating assets like Bitcoin, borrow against them. This is taking out loans in dollars, which are not do not generate a taxable event, and then step up the cost basis at inheritance. So I created Bitcoin Borrow Die as a way to basically take this old strategy and apply it to a new money. And there's a bunch of different ways that you can calculate this out on this website, but we'll just walk through the easy mode right now, where it has fewer inputs. So if we look at our first one here, it's the initial price of Bitcoin. Today is Sunday, September 14th, 2025. Bitcoin is around $100,015, and that's what we'll use for our initial BTC price. The BTC growth rate is how much you think it's going to grow each year annually. 29% is what Michael Saylor uses in his Bitcoin 24 model, so we'll use that here. The initial yearly amount for the loan is how much do we want to borrow against our Bitcoin each year and then roll the debt going forward. So for the initial year, we would borrow $10,000, and then every year after that, we would increase it by 5%. This model, the easy mode version, assumes a 12% loan interest rate, which I would expect that to come down over time, but we'll use 12 for now. A 50% loan to value LTV ratio. I would recommend using less than that to be more conservative, but 50% is industry standard. And then this model doesn't have retirement planning or anything like that. It's just basically looking at this $10,000. How much Bitcoin would we need over time, and what does this look like as we model it out and roll it over? And so looking at this chart here, we'll focus on the initial 10 years here, so year 1 through year 9. Now, when we take out our initial loan, we can see that we need more Bitcoin over time, and then it starts to come down. So for the most Bitcoin we would have to post is about 0.43 Bitcoins, about half a Bitcoin, to be able to borrow $10,000 every year and then roll it over at the end of the year. And then when we look at this on a per year basis, so when we start out again, so like net spending is how much we want to be able to spend that year from our assets. So we would start with $10,000. We start with a $10,000 loan. We start with an interest rate of 13%, Bitcoin price of 115K. So to get going at a 50% LTV, we would post 0.17 BTC in Strike, Lending, banks when they offer it, that type of thing. So that's $20,000 in collateral. We're taking out a $10,000 loan against it. It gives us a 50% LTV. So we put up 1.7 Bitcoin. We get $10,000. Depending on the loan you take or the service you use, I really like Strike because you don't have to pay anything in between. It just is due at the end of the year, at the end of a 1-year term. So we get our 10K, we do with it what we will. Next year, when the loan comes due, we want $11,000 for year 2 to spend. So we've got to pay back the initial $10,000 and then take out an $11,000 additional loan. So now our total loan amount comes to $22,000. Hopefully interest rates go down a little bit. That'd be nice. Um, Bitcoin price appreciates from 115 to 148,000, and then we would need 0.29, 0.3 Bitcoin to maintain our LTV. Because again, in year 2 we want to spend 11,000, but we have to pay off the first 10. So we're taking out a loan for 22,000. Right. So the collateral value is 44K. That all looks good, right? So then year 3, again, we want to take out $11,000 to spend in year 3. We've got to pay back our 22, so our loan comes up to 35,000. Have our interest rate again, but now Bitcoin should be at like 190,000 versus 148. So we would need 0.37 Bitcoin in year 3 to maintain our LTV of 50%. So this kind of keeps on going year after year. But what becomes really interesting is that in these years further down, like 7, 8, and 9, we're still only like increasing our loan by $13,000, $14,000, $15,000, right? But in terms of the percent of the loan going up, it's much less. So from like year 1 to year 2, we're more than doubling the loan from 10,000 to 22,000. From 107 to 129 is much less than a double, right? And then we see Bitcoin continue to appreciate, which is really, really interesting because as Bitcoin continues to take off and our loans don't dramatically increase, we can actually start to see that we need to post less collateral over time. So this is just a walkthrough of the first 10 years and kind of a high-level view of the Bitcoin Borrow Die strategy. We'll have more on this later, but if you're interested in this, check out www.bitcoinborrowdie.com and get started.